Hello, everyone. Happy New Year. Joe Vitale, American Retirement Advisors, with the Great Investments Weekly Talking Points for January 14th, 2020. Sorry, I was out sick last week, then in conferences the week before, so it's the first time seeing you this year. Let's talk about stocks. The U.S. markets declined last week as investors turned their attention to the Federal Reserve with its plan to raise rates in the coming weeks and months ahead. Now, the S&P declined 0.29, the Russell was down 0.79, and the NASDAQ dropped 0.28. We've seen a lot more drops this week. Overseas markets were positive, with the developed markets, which was the EFA, going up 0.18, and the MSCI was up actually 2.58. Now, in the U.S., the energy and communication services were the only sectors to show gains, while real estate and consumer discretionary were the poorest performers. We are seeing a lot of volatility, and the market is moving a lot. But this is why we diversify and stay the course. Staying invested is the best way for growth. We see this all the time. Everybody's like, Joe, my goodness, what's going to happen? The market's going up, the market's going down. Now it's the end of the world. What do? We stay the course, we stay invested. Everybody's running to the big blue chips right now. This is where we need to be because we don't know what's going to happen. We're seeing a lot of inflation, but remember, people are still consuming. Companies are still out there. We still have good fundamentals. That's where we stay invested. Let's talk about other fixed income. Representatives for the Federal Reserve have signaled that higher interest rates are in the works amid the highest inflation in nearly 4 decades. Interest rates rose 12 basis points to 2-year treasuries, while the 2 basis points to 10-year and 1 basis on the 30-year. So the flattening of the yield curve. The yield on the 10-year treasuries ended the week at 1.78%. That was actually at like 1.48 just a couple weeks ago. So we got almost a quarter point already higher on the 10-year treasury. Commodities, let's talk about oil prices. They continue to rise, and they're up 6.2% to $83.80 a barrel. They're talking they're going to hit $100 a barrel. Yes, we're going to see over $4 gasoline prices. Doesn't have to be this way. We talk about this, but this is what's happening, so get ready for it. Let's talk about economic data. Consumer prices rose 0.5% in December, pushing the cost of living to nearly a 40-year high of 7%. So we talk about inflation, we talk about transitory, non-transitory. Guess what? It's going to stay around for a little bit. It's not going anywhere. We will see some other things start to come down a little bit, but the cost of goods and services are going to be higher. We're going to see higher inflation for the next year or so. The core inflation rate, excluding volatile food and energy, rose 0.6 for the month to 5.5% over a year, which is a 31-year high. Wholesale price inflation eased dramatically to 0.2% in December, the smallest increase in over a year, below the expected 0.4. Wholesale prices tend to foreshadow changes in the price where the consumers pay. So particularly noteworthy was December's decline in the cost of goods, especially energy prices and wholesale food. So let's talk about core retail sales, excluding vehicles and gasoline, declined 2.5% in December, which was well below expectations for a 0.3% gain. Now, online, the sales declined sharply by 8.7%. For the full year, total retail sales were up 19.3%. Now, U.S. industrial production declined for the first time in 3 months due to slower factory production and warmer than usual temperatures that led to less demand for heat and utilities. Industrial production dropped 0.1% in December, although it was up 4% for the full quarter on an annual basis. Now let's get into some company news. JP Chase, which is a G50 holding, shares declined 5.5% last week, following comments by CEO that rising rates from the Fed may be greater than consensus expectations and pressure costs for financial service firms. However, quarterly earnings were better than expectations. So that's what happened with JP Morgan. Now, how about Pacira Biosciences, which is a G33 holding, rose 6.75% following a preliminary report that revenue rose 26% for the fourth quarter, well ahead of expectations, and sales have been pressured by the prior year due to a reduced number of elective surgeries. How about Taiwan Semiconductors? We hear everything about waiting for this chip shortage, right? Well, this is the G40I holding, was up, sales were up 24% in the last quarter, exceeded expectations. They are committed to spending $40 billion and $44 billion on a new facility. So we're seeing that the shares rose 13.89% for the week. And that's it. That's all we got for the week. So that's enough, right? For right now. Remember, we are seeing a lot of volatility. We are seeing a lot of ups and downs in the markets. People are starting to panic a little bit. Like, Joe, the market's going to go down. You know, we are probably going to see. We know we're down almost 10% in some sectors right now. We're probably going to go maybe another 5%. But remember, we also had a 25% year last year in our G50 portfolio. We are seeing up and down. Stay the course. This is what we're in for. We're in for the long haul. This is why we've got safe money and growth money. Also, you're going to see a QR code. Make sure you hit that QR code. That way you can subscribe to our newsletter and get our information all the time, whether electronic or paper as well. So thank you so much for being part of the ARA family. God bless you. If you have any questions, feel free to give us a call at 855-756-5700 or email aradvisorsinc.com. God bless you. Have a good week. We'll see you on the next video.